Hi, welcome to another video of Property Expert Academy. So we have had the autumn budget statement, the UK by the UK government. Now we are basically in the highest recession, the longest recession we can call it. The maximum inflation rate is 11.1%, which is the highest in last 40 years. So what is going to be affecting? How is it going to affect our uh, buy to let and the HMO landlord or the property investors? So let's stay tuned and then we'll be discussing more about this. Now you need to up the game as a property investor. So let's see what are the changes. So first of all, of course the UK government is currently struggling with the debts. What it means is like if there was inflation which is only 3 or 4%, it's okay, but then this is like the highest double-digit inflation of 11.1%, which is a lot actually. And what it means is like basically now the a lot of lenders are losing the confidence in the government. They don't want to, borrow at the same rate, uh, and also the debt servicing ratio is affected because they are feeling a bit nervous how whether the government is going to keep up the monthly repayment and chip in the payment towards the debt that they have. So now, first of all, the higher tax threshold, which was, uh, for the higher tax rate, threshold has gone down from 150,000 to 125, which is basically probably one of the highest tax rate of 45% in the whole world. Like most of the country, for example, US, the highest rate is only 37%, which only kicks in when the earning is more than 539,000. So you're looking at that, like UK, highest tax rate kicks in on a much, earlier stage, which is now has become instead of 150 to 125. And of course, the other bit of 40% still remains around the 50K mark. But then what it means is uh, the middle class or the medium-sized companies, or the people who are only having average earnings, they are going to hit their 45% rate much earlier, and which is not good for many of the medium range property investors. Now, also, which is very interesting, now the council are allowed to increase their council tax by another 5%. So those who are managing HMO properties or service accommodation or kind of property investment portfolio, where you are the one who are paying the council tax as well, you may probably expect a hit of by another 5% from the council tax bill. And also the company's uh, dividends, tax-free dividend allowance has gone down from 2,000 to 1,000 pound only. And of course, the capital gains threshold, which has halved now is 6,000 only per annum, and corporation tax as well now from April 2023 is going to be increased from 19% to 25%, and this is one of the longest recession in British UK. Basically now what it means is now interest rate is going to go up. Most of the banks have now increased the rate of interest, which is about around 5 to 6%. Also, that's only for the house that you live or like the mortgage that you have without buy to let. Now, where the buy to let properties are, even the rate of interest has gone even higher, around 8% sort of, and also the stress testing has gone a lot. So, which means like your debt servicing ratio, but they used to take your rental income or stress test. Now they were expecting 125 to 145% times of the rental income to justify that 8.5% sort of uh, mark. Now, other thing is what it means is like many investors who were basically investing, like there were many lucky investors, because they say when the market is bullish, everybody expects that they feel that okay, we are the expert. But then the recession is a time when you will see, like they say that when the tides are gone, then you realize how many people were swimming naked. So now this time will basically show whether the property investor, those who were running the business for the last 5-10 years, like a lot of people who were coming up on YouTube, claiming to be like a property experts, property guru, and all. whether they will be able to survive in this market. Now, thing is, if you have a system in place, that's well and good. You will be able to survive. But then those who are lucky landlord, I call it like people who were just becoming accidental landlord or who were basically buying property, counting on the property prices going up, have not added value basically in the portfolio. But the main thing was they've been lucky to enter into the market where the market was booming. And of course, they kept borrowing money, they over leveraged themselves, and they kept borrowing more than the capacity to even deliver. So all that basically will be shown now, whether they will be able to survive in this market or not. And as long as you have a good system in place, you have learned this, like how to do it, you will know basically your debt servicing ratio, whether you have leverage enough or not, whether you need to readjust your portfolio, and borrowing wise, you need to adjust them as well. So all that is very important for any property investors. And you got to basically look into your books and then see how you're going to go forward, because anyone like basically who would have come up in the last 5, 10 years may not have experienced the recession prior to that, and they may not know how it's going to impact the real estate market. I've seen personally, many people who have built a portfolio of 100 properties and all, they have come to me as well for advice, and I've seen them getting burst as well, during the last recession or even in the difficult time when they go through. So this impact on the new budget is definitely going to be the longest recession ever. Even there are, graphs that shows as well now. This time, the recession will take much long time to recover. The inflation rate has hit double digit now, 11.1%, which is the largest, inflation rate in the last 40 years. We haven't seen that before. So all of this basically shows that the investor need to be very careful. And also you need to buy property with more creative strategies, not like a traditional way. So of course, we deal more about this in our Property Expert Academy's workshop. You can find the link below, or you can of course, reach out to us, and then you can discuss more about it, how you can really, up your game as a property investor in this current climate. In fact, they say that the recession is the only time when you make the most of the money. In fact, if you ask any, successful property investors, they will probably tell you, the most of the money that they made was in the recession time. So this, in a way, is a opportunity as well, where you can see how you can really make money. Because a lot of landlords who may not be able to, keep up with their mortgage payment, or may not like to keep this whole burden of, property portfolio. Many of them may be retiring as well. So those who are retiring probably will be, of course, looking to sell the properties, and probably have different business plans. Then there may be also all of this, the lucky landlords, basically I call them, lucky landlord who basically were making money until now, probably will realize how is this new rate going to hit them, and until the recession is continues, how it's going to impact them. So many of those properties will become available, and that this is an opportunity for an educated investor like ourselves to get involved and then make the most out of it. So stay tuned for our next video. Meantime, if you have any other queries, feel free to write in the chat box. If you want me to make another video on any other topic, feel free to write down. And also, let us have your views on this new budget. What do you feel about the UK new budget statement that has come out today on 17th of November 2022? So we'll look forward to seeing you soon. Until then, invest in knowledge, invest like a pro. See you then.